We're taking a look at some calls of the day right now, starting with DocuSign and Coupa Software. RBC is warning that a weaker macro picture will affect software earnings. It's slashing its rating on DocuSign to sector perform from outperform, and Coupa Software is going to underperform from sector perform. I mean, what's interesting here on DocuSign in particular is that, of course, it has been an underperformer. I guess RBC was coming in here and saying, well, maybe it's fallen enough to buy, but now not doing that, saying now is not the time to get in here. Weak bookings may take time to show up in revenue or in billings, according to the RBC analyst. And Coupa, according to RBC, looks disproportionately recession-prone compared to its peers, which is not something you want to be in this environment, Saz.
Yeah. No, not at all, Julie. You are, in fact, correct. But DocuSign, it's... I'm a little concerned about the near-term outlook for DocuSign, but again, this Coupa call comes ahead of Salesforce's earnings later this week. A lot of eyes on that report, and if they, in fact, saw a slowdown in backlog, I think a lot of the notes out this morning, a little concerned on that. Not surprised to see this call.
And with DocuSign, even as we're taking a look at that longer-term period, this chart for the one-year period, seeing them down by about 78%, there was so much of what we continue to talk about, that pull forward in demand that happened early days of the pandemic. And even after this company had gone public, there was a larger question of once they hit the total addressable market and you enter in the competition as well, account for that, the number of different solutions where DocuSign is going to need to rely on the partnerships that they've been able to create to even address some of those portfolio clients that they may not have, but because of their plugin that they allow to so many of the Adobe can have their own plugin, but Microsoft, where DocuSign had really netted one of those key partnerships to allow them access into a portfolio client base much larger than their own. Once they've actually fully tapped that, then where else does the growth come from? And that's a significant headwind that they continue to face even right now, Saz.
All right, let's stay on tech here. My call today is Tesla. I'm looking at Garrett Nelson over at CFRA, lifting his 12-month price target to $1,245 from $1,125. You do the rough math, he's looking for about 42% upside in Tesla shares from current levels. We mentioned this at the top of the show when we were talking about Tesla, but according to Nelson, the signing of the Inflation Reduction Act was the equivalent of, quote, Christmas in August for Elon Musk. So the basic call is this. You could probably see an acceleration in Tesla profits in coming quarters. At least that's the vibe I got from Nelson's note, as more people get out there and buy electric cars because of this tax credit.
I mean, you have to wonder, though, about all of these sort of exogenous factors that are affecting Tesla, everything from the NHTSA investigation into autopilot that we talked about earlier to Elon Musk's court battle over Twitter and kind of what effect that is going to have on the company. But I don't know how you model that stuff as an analyst, really.
Yeah, and it really continues to come back to not just Tesla and how any of the price hikes that they've already started to institute or those that they've signaled, whether it's on individual features or the total cost of the car, it's going to be the manufacturing and the raw materials and ensuring that those raw materials costs don't continue to tick up, because suppliers know what the environment is right now. They know exactly what type of demand that they're seeing. And so the long-term contracts come into play as you're seeing even more of the automotive landscape get more competitive around their electric vehicle plays. Ford, a GM, and then even internationally, when you see some of the Mercedes-Benzes of the Mercedes-Benz brand more internationally, or Volkswagen, all of those with the EV plays that are moving forward, they also have a customer base that has been prone to say trade in and trade up. And so that's perhaps where they're going to lean into their strategy there. And we'll see exactly what that means for Tesla. But the battery, it's going to come back to that. So as long as the battery is better, perhaps they'll get more mileage for the consumers there.